Hi, good afternoon, colleagues, and good afternoon, Doc Abante. And this afternoon, I will discuss the global investment strategies. These are the topics that I will discuss throughout this report. One is asset allocation and diversification across geographies. And then we also have sector-specific global investment strategies, the role of technology in global investing, risk management in global investment strategies. And then five is investment vehicles for global strategies. So let's start with the first topic. Or by the way, this is just an introduction. In an increasingly interconnected world, global investment strategies have become essential for investors seeking to diversify their portfolios and maximize returns. These strategies enable investors to tap into a variety of international markets, taking advantage of different economic cycles, demographic trends, and industry growth. So, this report delves into the key global investment strategies and the factors influencing them and their potential risk and benefits. So the first strategy is asset allocation and diversification across geographies. So asset allocation is one of the core principles of global investing. A diversified portfolio is spread across various regions such as North America, Europe, Asia, and emerging markets like the Philippines and Southeast Asia. So these can help manage risk and smooth out volatility by investing in different geographic regions. Investors can mitigate the impact of localized economic downturns. So, for example, when one economy is experiencing a recession, others may be growing, providing a buffer against global market fluctuation. So it's important for you to diversify your assets. Hindi ka lang mag-i-invest sa isang country or isang geographic location because you cannot assure whether or not sooner or later magkakaroon ng economic downturn sa mga places na yon or recession. So if you diversify your um, assets, yung asset allocation mo, then if let's say yung isang part ng globe ay nagsasuffer sa recession, yung isa naman ay hindi, then at least at the same time, meron kang backup. So this one can be classified into two. So we have emerging markets. These regions, including countries in Asia, Africa, and Latin America. So these emerging markets offer high growth potential due to their rapid industrialization and expanding middle class. Here sa emerging market ay since rapid ang kanilang expansion and industrialization, ang growth potential is mataas. However, they also come with higher risk kasi prone ang mga countries na to sa political instability. For example, sa Philippines, emerging tayo or developing country tayo. But if you can notice sa nangyayari ngayon, so politically unstable, but manageable pa naman. Pero ano siya, trend. Trend talaga siya sa mga developing countries na ang political instability is highly likely. So medyo risky mag-invest dito. Although mataas naman ang growth potential kasi nga expanding ang economy. And then prone rin ang mga emerging countries sa currency fluctuations kasi yung mga currency ng mga developing countries ay hindi naman ganun kalakas compared sa mga dominant currencies like the USD, euros at saka yung pounds. And also sa emerging markets, mga emerging countries, meron silang less developed financial systems. So yun naman yung mga risk na kailangan na i-consider. Next is developed markets. So developed markets are countries like United States, Germany, Japan, and other European countries na kasama sa European Union are considered to be more stable compared sa mga emerging economies natin or emerging markets. So with established markets and strong regulatory frameworks. But the returns from developed markets tend to be lower compared to emerging markets. So bakit kaya lower ang growth sa developing markets? So ang primary reason why lower ang growth is that these markets, let's say for example Japan or Germany, napaka-mature na kasi ng kanilang country. So when it comes to um, economy, hindi talagang napaka-stable nila. But yung growth is hindi na ganun kabilis since malapit na nilang ma-achieve yung parang pinaka-peak na kanilang economic point. So for example, pwede natin i-example dito yung Cambodia. Yung sa may Cambodia, medyo na less developed pa siya. Uso yung mga farming, ganyan. Papatayuan mo lang siya ng train, di ba ang laki ng kanyang improvement. So from farming, tas magkakaroon ng train sa area nila, malaki ang improvement. Whereas, for example, dito sa Japan, we all know na highly developed country ito, meron sila mga train system. Pag in-improve mo yung train nila, hindi mo naman siya may improve na drastic eh. So, improve mo lang siya, gagawin mo siya ng bullet trains, yung way of transportation. So, train pa rin siya, pero naging bullet train. So, mapapansin mo, yung changes is hindi drastic compared sa example kanina na Cambodia. From farming, tas magtatayo ka ng train system doon for transportation, ay drastic yung change. So, yun ang pinagkaibahan ng developed markets compared sa emerging markets. So, sa developed markets, matured na sila and well-established ng economy and stable. Yung growth, yung explosive growth is hindi na expected sa mga developed countries. But here sa developed markets naman, they offer more secure or more security for conservative investors. Yun yung mga investors na sigurista. Now, the second global strategy is yung sector-specific global investment strategy. So, while geographic diversification is critical, sectoral diversification is equally important too. Certain sectors outperform in different parts of the world, and recognizing these trends can be key to optimizing global investment strategies. Okay, so one example is technology and innovation. The global technology sector, driven by advancements in artificial intelligence, cloud computing, and financial technology, presents opportunities across both developed and emerging countries. So if ikaw ang investor, and if it's related to technology and innovation, for me, it would be better and wise if you invest sa mga countries or kaya countries na mayroong companies na leading when it comes to innovation. For example, Silicon Valley ng United States, yung China, part din yan, Europe, and one example is Taiwan, yung sila yung may control ng mga chips, microchips sa world. So sila ang pinaka-dominant doon. So you might consider investing in those countries when it comes to technological innovation. Kasi kung mag invest ka naman sa mga countries na walang ability, for example, Somalia sa Africa, so hindi naman ata wise na mag invest ka ng related to technology doon, right? And then we have healthcare and pharmaceuticals. So the global healthcare sector remains a stable and profitable investment avenue with biotech, pharmaceuticals, and healthcare technology being high growth areas due to aging populations and increasing demand for healthcare services. So ito yung second example ng sector-specific global investment strategies. So sa healthcare and pharmaceuticals. So as humanity advances, we continue to develop innovative technologies to tackle diseases and that remained unsolved or uncured for many years or even decades. So at the same time, yung mga new diseases and viruses are emerging na din. So it further underscores the critical need for financial advancement, healthcare advancements. So as a result, as an investor, uh, significant ang mga variables na ito o yung mga considerations na to para mag-invest ka related sa healthcare sector. Kasi uh, ang demand is hindi naman nagbabago. Yung mga tao nagkakasakit naman. And we know that. We all know that. And then yung treatments and solutions to address both existing and emerging health challenges ay high demand. Until today, high demand pa rin siya. Third strategy is the role of technology in global investing. In recent years, technological advancements have revolutionized global investing. The rise of robo-advisors, blockchain technology, and artificial intelligence or AI has made it easier for investors to access global markets, analyze data, and make informed investment decisions. We have robo advisors. So these digital platforms are use algorithms to automatically allocate and manage investments across different asset classes, including global equities, bonds, and alternative assets. They have lowered the barrier to entry for individual investors. These provide them with access to diversified global portfolios at a fraction of the cost of traditional financial advisors. So yung mga robo-advisors natin, it utilizes the power of AI, artificial intelligence. So ito yung mga example na pwedeng ma-utilize ng isang investors, yung isang investor. So we have Betterment, Sophie, at saka yung Wealthfront. So, itong mga robo-advisors na to ay meron silang fee pero hindi ganun kamahal compared sa mga traditional financial advisors kasi mga tao talaga tong mga ito. Yung mga robo-advisors, ito yung mga na-develop na rin naman ng mga tao pero hindi sila yung, of course, yung human talaga na you can make contact with. And we also have crypto currencies. So like Bitcoin and Ethereum. Um, these are increasingly viewed as alternative investment assets, though their volatility presents a challenge. Some global investors see cryptocurrencies as a hedge against traditional market risk or inflation. So sa cryptocurrencies kasi, they are considered to be the digital gold because yung supply nila is fixed. Ang cryptocurrencies ay decentralized, meaning hindi sila kontrolado ng gobyerno, hindi sila kontrolado ng central banks. Ang this feature makes them appealing during periods of monetary policy uncertainty, such as when central banks increase the money supply or keep interest rates low. So, itong mga ways na ito or exemption ni cryptocurrency ay napoprotektahan siya against inflation. So, yun ang kaibahan ng crypto sa sa mga financial tools na kayang ma-control ng central bank. And then fourth strategy na nandito sa report is risk management in global investment strategies. So while global investing offers numerous opportunities, it is not without risk. These risks can include geopolitical instability, market volatility, interest rate changes, and liquidity risk, among others. Effective risk management strategies are crucial for protecting an investment portfolio from significant losses. So one example is yung geopolitical risk. Political unrest, trade wars, and government policies can heavily influence the performance of investments in certain regions. So it's important for you to know this risk yung sa globally. For example, dito sa trade wars and government policies, yung tension between the United States and China have uh, you know, far-reaching effects on global supply chains and stock markets. Tapos we all know that meron silang bagong elect na president na uupo next year. And then naririnig na natin yung tungkol sa tariffs na i-impose ni Donald Trump against particularly sa China. So medyo magiging uncertain ang global supply change sa gagawin nito ni Donald Trump. So as an investor, if that happens, it's practical or wise to relocate yung mga manufacturing operations sa mga countries na hindi naman matatamaan ng husto ng tariffs, import tariffs ni Donald Trump. So investors might invest in Southeast Asia like Vietnam, Thailand, Philippines na hindi naman talaga subject ng tariffs. Although subject talaga ang international, yung mga imports, pero more on nakafocus kasi ang tariffs ni Trump sa China. And then this shift, yung tariffs can disrupt the long-established supply chains and it increases operational complexity and might raise costs. So better na mag-diversify ang investors. So not only in China, but they can try alternatives. And then we have interest rate and inflation risk. Changes in interest rates, particularly in major economies like the US, Europe, and Japan, can affect global investment returns. So rising interest rates can lead to lower corporate profits dahil pag mataas ang interest rates, yung consumer spending is mas mababa. Kung mababa ang consumer spending, mababa ang sales ng mga company. That can negatively impact, of course, yung global equity markets dahil pag mababa ang consumptions, mababa ang sales, mababa ang turnout, mababa ang profit. And then we have liquidity risk. Some markets, particularly in emerging economies, may face liquidity constraints, making it more difficult to buy or sell assets without influencing the market price. Investors must consider the liquidity profile of the markets they are investing in. So, kung babalikan natin yung definition ng liquidity, so liquidity refers to how quickly and easy an asset can be bought or sold in the market without affecting its price significantly. In financial terms, yung liquidity describes the ability to convert an asset into cash or cash equivalent with minimal price fluctuation. Ang example, maaring example ng liquidity risk, yung nangyari sa Turkey noong 2018, yung nagkaroon sila ng currency crisis. So dito na-observe yung liquidity constraints. And then, yung investors during that time, they lack market depth, yung pagkakaintindi sa market ng Turkey. And then the high volatility of Turkish assets during this period showed that investors need to consider the liquidity profile of the markets they invest in. Because kapag mababa ang liquidity, this can lead to greater price fluctuations. So mas mababa ang liquidity, higher din ang transactional cost or transaction cost, and mas mahirap ang execute ng trades. So it is a critical factor when evaluating investment opportunities in emerging markets, emerging economies to consider liquidity risk. So dapat mataas dapat ang liquidity, not low. And then finally, we have number 5 na strategy, investment vehicles for global strategies. Investors can choose from various vehicles to implement their global investment strategies. We have ETFs, we have global bonds, and then direct international stock investments. So let's start with mutual funds and exchange traded funds or ETFs. These funds allow investors to gain exposure to global markets without directly purchasing individual securities. Itong ETFs na to is ideal sa investors who seek diversification and personal management. On the other hand, we have global bonds and fixed income. Investing in bonds from international governments and corporations provides opportunities for income generation and capital preservation. Yung bonds kasi, they pay regular interest, yung mga coupon payments sa mga investors. So it offers a steady income stream. Sa bonds, they are considered, of course, safer than stocks as they are debt obligation with a fixed repayment schedule. And then we have direct international stock investments. Investors can directly purchase stocks listed on foreign exchanges, mga forex. However, this requires knowledge of foreign markets, regulations, and tax laws, which may be complex. Ang opportunities na pwede dito sa direct international stock investments is that this allows investors to directly invest in companies from different countries and region. This will gain exposure to global markets and potentially higher growth opportunities. So as a summary, global investment strategies offer significant opportunities for growth and diversification. By spreading investments across multiple geographies, sectors, and asset classes, investors can better manage risk and maximize returns. However, it is also crucial to remain mindful of the inherent risks such as geopolitical instability, currency fluctuations, and market volatility. To successfully navigate global markets, investors must develop a well-researched strategy and stay updated on international economic trends and employ risk management techniques. With the right approach, global investment strategies can offer strong potential for long-term financial success. So that's my report, and thank you for listening.